afternoon from the New York Stock Exchange. I'm Caroline Woods coming to you from high above the trading floor on this Tuesday, November 18th. November is usually the strongest month of the year for the stock market, but with less than 2 weeks to go, this one just isn't delivering, at least not yet. Stocks are under pressure once again today. There's a lot of red on the board. The Dow is off more than 600 points in afternoon trading. The S&P 500 is on track for its fourth straight decline. So what's driving the pullback? There is a growing debate over the strength and durability of this year's AI-powered market rally. Investors are getting increasingly nervous about stretched tech valuations and whether the AI fundamentals can keep up with the hype. We're seeing that tension play out today. Tech is leading the sell-off, and the bears are clearly in control. The Mag 7 is lower, with Amazon and Microsoft leading the declines. Nvidia is also in the red ahead of its earnings tomorrow afternoon. The chip giant has fallen almost 10% this month, leading up to its third quarter results. Even news of a big multi-billion-dollar AI partnership isn't doing the trick. AI startup Anthropic said it will spend $30 billion with Microsoft, and in turn, Microsoft and Nvidia will invest billions in Anthropic. Alphabet was one of the few bright spots, though it just dipped lower. Amid broader fears that AI may be turning into a bubble, CEO Sundar Pichai told the BBC that parts of the AI boom have shown irrationality, and he warned that no company is immune if the bubble bursts. Google also said it's debuting its latest artificial intelligence model, Gemini 3, as it races to keep up with ChatGPT. Meanwhile, if you had trouble getting into ChatGPT or X this morning, it wasn't just you. A major outage at Cloudflare, the company that helps keep huge swaths of the internet running, briefly knocked a bunch of major sites offline around the world. Most services were back up and running within a few hours. Among the platforms hit, Shopify, Indeed, Anthropic's Claude chatbot, Truth Social, X, and even parts of New Jersey Transit's online tools. Down Detector, the site people normally use to check if something is down, was also affected. A Cloudflare spokesperson said the company had identified the root cause of the outage, noting there was no evidence it was caused by an attack or malicious activity. So the internet is mostly back to normal now, but Cloudflare shares are still under pressure. The market weakness we're seeing in stocks today is spilling over into crypto, too. Bitcoin quickly dipped below 90,000 earlier, a sharp pullback from its record 126,000 just last month. It had since recovered, but is still trading below 94,000. Even gold, which can sometimes be looked at as a safe haven when the market is selling off, is lower. Losses are modest, but it's more than 7% off its all-time high. Taking a look at some other stocks on the move, Home Depot is the worst performer on the Dow today after reporting earnings that missed expectations and cutting its full-year outlook. The company pointed to soft home improvement demand, cautious consumers, and unusually low storm activity, all of which hurt business. CEO Ted Decker said consumer uncertainty and ongoing housing market pressures are disproportionately impacting home improvement demand. Home Depot now expects full-year EPS to fall about 5% from last year, worse than its prior forecast for a 2% decline. It also expects full-year sales to rise 3%, with comp sales, or sales at stores open at least a year, only slightly positive, versus earlier expectations for 2.8% sales growth and 1% comp growth. Lowe's shares are also lower ahead of its own results due out tomorrow before the bell. There's a lot of red on the screen, but we do have a few standout winners today. Amer Sports is moving higher after reporting earnings and sales that beat expectations. This is the parent company of Wilson, Arc'teryx, and Salomon, and the strength of those brands is showing up in the results. Amer also raised its full-year outlook. CEO James Zhang said the company's brands are well positioned within the premium sports and outdoor market, which he called one of the healthiest segments in the global consumer landscape. Deckers Outdoors, the parent company of Hoka and Uggs, is also bucking the downtrend after getting a bullish upgrade from Stifel. The analyst there said now is the time to buy and raised its price target to $117 on the company. Shares of the company are down almost 60% this year, but are bouncing back today. Retailers will be back in focus tomorrow. We'll get earnings from TJ Maxx parent company TJX, Target, and Williams-Sonoma. And of course, Black Friday is next week. It's typically one of the biggest shopping days of the year, so we'll be watching closely for what retailers are saying about their holiday sales outlooks. I'll be back with an update on that and more tomorrow, but that's all for now. I'm Caroline Woods at the New York Stock Exchange. Have a great rest of your day.